It's good to be back with another fresh episode of Just Nigeria, brought to you by the BBC and Channels Television. And here we track stories online in the news and dissect them. I am Wali Fakile. Let's kick off with our top story. It's now official. Nigeria's tax system has been rejigged, with the fine letters reprinted. Reliefs and the allowances have been announced, and the new law may silence the noise about double taxation and other issues. But what about other parts of the new law? New deductibles for those earning above a threshold, compliance, and what all of this truly mean for you? Mercy Frank has some answers.
Nowhere in the world that tax reform will ever be any easy.
From rent to income to side hustles, Nigeria's biggest tax shakeup in decades is about to hit home.
We will be fair in our taxation system, we will be responsible in how we borrow, and we will spend in a sustainable manner.
No individual should be smart by half. By making life difficult for the government, you do that, you pay more.
It's important to be aware of the changes you need to make as an individual.
For a long time, talking about taxes in Nigeria felt like wading through a murky swamp. But in June 2025, President Bola Tinubu put pen to paper, signing a package of new legislation. This latest tax law, which comes into effect from January 2026, is a departure from the previous tax system, which was shaped by colonial legacies and oil booms. More than a dozen outdated laws have been merged with clearer rules, digital compliance, and new tax brackets.
We also have instances where provisions of our tax laws were taxing capital. If you wanted to invest, we're taxing investments, and we're not using data enough to know who was declaring honestly. And people who actually want to do the right thing, they found it was complex.
Under the 2019 Act, personal income taxes followed flat deductions. Low-income earners still paid taxes. But from January 2026, under the new law, those earning 800,000 naira or less will pay nothing, while the middle to high income earners will be taxed at a rate up to 25%. Stella Akoma is a middle-income earner living in Buari, a suburban community on the outskirts of Abuja, the Nigerian capital.
As a buyer, you are taxed. As a salary earner, you are taxed. And it leaves you with nothing to save. Even as you want to save in the bank, you are still taxed for saving.
Away from Abuja, in southeastern Nigeria's Anambra State, retail business owner Vincent Nwankwo, a printer for about 2 decades, represents thousands of medium and small-scale businesses that are defined by the new law as earning 100 million naira or less annually.
We pay business premises as a state revenue and tax as well. They call it presumptive, which we don't actually know. What we used to pay 2,000 naira, they have increased it to 8,400.
The new tax law promises harmonization, but will it reach business owners like Vincent? The new tax law promises to be a game changer. So, what should Nigerians expect?
We have a very high compliance gap, which means a lot of people are not paying their taxes correctly, and some are not paying at all. And in fact, that was disproportionately at the middle and upper class level. So imagine the people paying most of the taxes are the low-income earners, and that's not ideal.
If you are running away from the Nigerian Revenue Service, you don't want to pay company contacts, so you want to perpetually be under the threshold, you divert business to your name. You can't deny that those activities again.
The jump is not significant. It's not like there's an additional tax burden on you beyond measure. I mean, 25% is not too far out, right? And that 25% is the highest band.
It's basically about trying to redistribute wealth, using taxation as a very important tool.
The new law also offers a 20% relief on annual rent to homeowners and urban dwellers.
To a very large extent, I do not think that we can actually expect that much of a relief or demand for more than we've already gotten in terms of rent relief.
In this new tax act, digital entrepreneurs and their dollar-denominated income are now in the spotlight.
If you're an influencer and you make $1,000 equivalent in a year, you will not pay tax. And if you do cryptocurrency, what we've done to promote fairness is when you have gains, you need to declare them. If those gains are small and you fall in the band of low income, you will not pay any tax.
Over the years, there have been frictions on value-added tax collection and sharing model between federal, state, and local governments. How does this new tax law clear the blurry lines?
The federal government agreed to concede part of their own revenue from VAT to the subnational, and this is significant. So state and local government will see more revenue coming to them. Then in terms of how they share revenue, they told us what they wanted. Do 30% for consumption or derivation, do 50% for equality, and 20% based on population.
Take, for instance, Personal Income Tax Act. It's a federal law. Okay, no state has the power to pass our own personal income tax, personal income tax.
While the tiers of government figure out sharing models, the new tax law is clear on VAT exemptions for some products and services.
When you zero rate an item for VAT, it means there's no VAT when you sell the item or service, and any VAT incurred in producing that item, government will refund it. We've done that for food, we've done that for healthcare, we've done that for education, we've exempted accommodation, we've exempted transportation.
From traders in the markets to working-class citizens in urban terrains, there is heightened curiosity and the need for more clarity about Nigeria's new tax law.
If I calculate all the things they used to add more, they used to do all the... it's too much.
And the worst part of it, they don't even explain the thing to us, so that we did not go to school, so that we understand the thing very well.
I mean, someone like me take about 68,000 naira every month for my salary, and I don't see what is being used for.
When the citizens pay their tax, the government should utilize it for the good of the country and for the citizens.
Tax matters are fundamental components of national development, yet they are grossly misunderstood because they hide behind jargons. A major misconception about the new Nigerian Tax Act is that it is designed to solely generate more revenue for the government.
It's about the economy, it's about competitiveness, removing distortion, doing tax harmonization so that we don't have multiple taxes that are impeding business growth.
Another misconception about this tax act is that falling under the category of small businesses exempted from taxes means you pay nothing for the whole year.
We must distinguish between taxes, user levy, and service charge. So you can't say, oh, sorry, I've paid my tax to the state, local government cannot collect. They will come and collect levies and rates as specified in the Constitution.
With this new tax law exempting low-income earners, there is the misconception that the middle class suffers the brunt.
The middle class will pay lower taxes than they pay currently. It is above the middle class, which is your now high income to high net worth individuals, are the ones that will pay marginally more.
Rewriting a tax law is one thing. Rewriting how Nigerians feel about paying tax is another. The big question is, will these reforms bridge the trust gap or widen it? Because in the end, what matters isn't just what's written in the law, but what's felt in the people's lives. Mercy Frank, Gist Nigeria.
Eye-opening conversation there. Now, are you happy with the new tax law? Let us know on our X handle at Gist Nigeria TV. We'd like to hear from you.